Good afternoon, everyone, and welcome to our session this afternoon. My name is Dafina Williams, and I am OFN's Chief Public Policy Officer and Head of Government Affairs, and I'm so pleased to be here today to moderate this discussion about how to leverage policy and coalitions to get access to capital for CDFIs. So as you've been hearing in the discussion so far today, the capital environment CDFIs are facing is increasingly challenging. And we've seen a lot of changes just in the past few years since when CDFIs had access to a lot of operating grants, low cost and long-term debt, and other resources from public, private, and philanthropic sources. So as we enter into this kind of post-COVID, post-George Floyd, higher interest rate environment, we are in some cases seeing a retreat from some of our corporate investors, seeing a lot of public sector money that was made available during the pandemic kind of wind its way through the system. And a lot of CDFIs are thinking about how to replace those dollars and where those next opportunities are going to be coming from. So this conversation, I think, is especially timely as we navigate this new interest rate environment and new caps on spending in DC, and even cuts that might be coming our way, and also just a more challenging fundraising environment from our corporate and philanthropic partners. So all of that combined is really putting a real strain on CDFI capital and their ability to meet borrower needs. A lot of CDFIs are really having some difficulty finding low-cost capital from their banking partners. So through numerous conversations with CDFIs, but also with banks, that as the cost of capital for our bank partners has increased and they're paying more for their deposits, they're becoming less able to provide those really low interest rates that we saw during the pandemic. So capital that might have cost 1 or 2% to a CDFI is probably coming in a lot higher at maybe 5 or 6 or 7% and with shorter terms. And that's leading to CDFIs having to make some hard choices, even potentially having to turn down capital because it's too expensive, or to have to absorb higher interest rates to avoid passing those costs along to their borrowers. And those higher interest rates mean higher payments to CDFI borrowers, and that puts a strain on both your other sorts of funding, so philanthropy, but it also means that it increases the risk to lenders. So I recently heard a CDFI practitioner note that every time the interest rate increases, the risk increases. Those higher costs mean that your borrowers are going to have to pay more to pay those loans back. That can put a strain on the financing of the businesses that you're serving, or it can even make some affordable housing transactions actually fall apart because it's gotten significantly more expensive and difficult to make those transactions pencil out. And this is all happening at a time where demand for CDFI financing continues to increase. And a lot of it is because of the amazing work that we all have been doing for years, but in particular, that awareness that came during the pandemic. So now everyone's coming to CDFIs looking for more capital. And at the same time, we have that strain on our balance sheets, and CDFIs actually are, struggling to find that capital to be able to deploy. So basically, CDFIs are being forced to do more with less and have few additional capital options to meet the growing needs. So what are we doing about all of this? Today, we're here to talk a little bit about how we can leverage the policy environment and how we can work with policymakers to help them understand the challenges that CDFIs are facing with capitalization. Federal policies are important and often the focus of a lot of this work, and we'll talk a little bit about that today. But we're seeing such amazing growth in CDFI coalitions at the local, state, and regional level that have been really successful. So on today's panel, we're going to highlight some of those approaches that have worked and shed some light on how these coalitions are working to address CDFI capitalization. We know that state level work is only going to increase in importance, especially given the dysfunction in Washington. And, depending on what happens in November, there might be even more increased challenges in securing those federal resources, especially grants. So today we're going to talk about what's happening at some of these state level coalitions and listen to some solutions that our great panel has helped to address. And we're lucky today to be joined by 3 CDFI leaders representing CDFIs working in local, state, and tribal communities that are making small business loans and affordable housing loans, and all of who are deeply engaged in that coalition building work at the local, state, regional, and federal level. So we're joined today by Jen Hayes, who's the SVP of Operations and Policy at Invest Detroit and a member of the Michigan and Detroit CDFI coalitions. Leah Freemow, President and CEO at Bridging Virginia and member of the Virginia CDFI Coalition, and Lakota Vogel from Four Bands, member of the Mountain Plains Regional Native CDFI Coalition. So I want to invite our panelists to start by spending a few minutes discussing their work. And Leah, let's start with you and the work you've been leading in Virginia. So can you describe your coalition? Who drove its creation? Who's involved? What are you seeing on the ground that drove the need for a state coalition? And how are you engaging in policy to address those capital challenges you're seeing?
Yeah, great. Thank you, Dafina, and thank you for everybody for being here. I'm excited to continue to talk about CDFIs and the work that we're doing through our coalitions. If you go ahead and go to our slide, please, Avery. Thank you. So just quickly to walk through our history, which is relatively short in a way, thanks to COVID and to the virtual environment. That's why we are here. In 2020, an actual former colleague of Dafina at OFN's, Andrea Longton, cold called me and my old CEO, Jane Henderson, which is now Locust, but Virginia Community Capital, in the height of COVID, and said, she was a Virginia resident, knew that we could be very effective at the ground level if we were capitalized and poised and set up to do so. And so kind of got the ball rolling. And in that session, Virginia's General Assembly session starts in January, and a long session will go through March. That year happened to be a short session. So we had, starting in October, hit the ground running, and through a budget amendment process in that session, we, surprising to everybody, even myself, got a $10 million allocation for a grant program to fund CDFI's operating capital and 0% lending capital. Given the dynamics at the time with COVID's impact on small business and the Commonwealth's prerogative, the money there was focused on lending and resources to small business. And part of that was because of the state agency, which was a very intentional strategic decision to put that budget amendment at that agency, and we can talk more about that in the Q&A and why or why not, and how that can really help with some of your policy agendas. But they wanted to focus on small business. They also have a process by which they get stakeholder feedback as they're designing new grant programs. So hence the bat signal that went out and said, hey, CDFIs in Virginia, we have $10 million. What should we do with it? Well, it's amazing, how people will show up for those meetings. and they showed up again and again and again. And so at that point in time is when we started to convene and meet monthly. And I won't go into all the details there, but essentially that consistency and that habit of being connected helped us see the value. And if you want to go ahead and go to the next slide, please. See the value of us being a voice in our state for our industry, because unfortunately, and I think we still feel this today, no one knows what a CDFI is. So when you're talking to your neighbor about a bank and a credit union or a CDFI, guess which ones they know about? Same thing with your policymakers and legislators. And so as we established a voice, kind of even before we knew we were going to be a nonprofit, we did the work around a mission statement and these 4 buckets of kind of focus that you see here in front of you, because of the things that we were all feeling together. And so we started to consistently meet, organized ourselves around these focus areas. And then about a year later, realized that a nonprofit structure would help us secure more resources and eventually create a thing that could represent us and really have a strong voice, like our bankers associations and credit union associations, for the work that we're doing here in the state of Virginia and beyond, actually. So our main initiative with the CDFI Coalition, because it's still all volunteer led, we don't have rigorous criteria to be a member. Bridging Virginia is an emerging CDFI. And a lot of our partners that join these monthly stakeholder calls, which have lasted since the first one in March 2021, that is, again, a consistent habit that we've had, which is probably 30 plus people on those calls. And then the nonprofit entity that we formed, again, 2022 on paper is when that finally came through. That's a board of 14 that represents the diversity around that board was intentional about geography and types of CDFIs. So we have housing, we have banking services, small business, all kind of loan funds, bank, credit unions, all kind of mixed in on that board. But those entities are there to support each other. And because we don't have a membership criteria and we are still passing the hat, for membership fees. We do have a small budget. All of that to say is our main focus is the state fund, the Virginia CDFI fund, which I can say in 2023 was put in statute in the state agency's budget. It is now an official program instead of a budget amendment, which can get taken out at any time. And we got a small allocation in 2023 as well, 1.3 million. So not the 10 million, not the 50 we asked for originally either, but having a new program in code with any money is crazy, as far as being successful. Unfortunately, in 2024, we were not successful increasing that allocation through the legislative process. What has been consistent is that this initiative has been bipartisan. And so when we were successful, it was a Republican in the House, a Democrat in the Senate. This past year, we had both parties signed on to the bills that we were working on. And our governor is a Republican. In his budget that came through, there was staffing for this fund at the state agency. And so that is our primary focus. We have also leaned in on programs like SSBCI, how even at the local government level, how ARPA and CARES dollars can be allocated through CDFIs or in partnership with CDFIs. So while the main focus remains a state fund, I think CDFIs kind of infiltrating the public sector in Virginia has gotten easier and gotten more pervasive in a great way here in Virginia. So thank you for the time today. I look forward to your questions and learning from my panelists.
Thank you, Leah. And so Jen, let's go out to the Midwest and let's hear about the work you've done both in Detroit and also statewide in Michigan.
Sure. Thank you, Defina. Thanks for having me today. Yeah, Michigan is home to two CDFI coalitions. Our Detroit CDFI coalition has been around for probably about 6 or 7 years now, and it's really focused specifically to our work in the city of Detroit and any of the CDFI partners that are active there. We also launched a state CDFI coalition a couple years ago. It officially launched last January, so January 2023, when we just got our 501c3 status, actually this January. So we are also a nonprofit as well. We have a lot of members that are members of both, but we have some members that are just members of one. So it's a very interesting combination of coalition members, I would say. And like Leah, we have kind of a 2 membership focus. We have certified CDFIs, but we also have what we call partner members. So members in the community or in the local governments or state governments that are really interested and partners for the CDFIs in our work. So they're active in our committee work and our policy work. So we're really excited to see it go beyond just the CDFI members. What really drove us to create the state CDFI coalition was really similar to Leah in Virginia, really around creating a state CDFI fund as well. During COVID, when Michigan had a lot of extra resources, we started, our Detroit CDFI coalition started reaching out to some of our outstate members and asking if they'd want to kind of work with us to come up with a proposal to create a state CDFI fund. And we were really fortunate to get $75 million in the first round of funding. Like Virginia, it was a budget amendment, so it was not a permanent policy bill. Last year, we were able to get another 9 million. So in total, we've received about 84 million. Our goals this year are to make the fund permanent. So we are working on a policy bill so it becomes an official program within our state economic development agency, where we can hopefully year over year kind of get we're shooting for 15 million. I don't know if that'll be possible. We have about 50 CDFIs in Michigan, about 47 are headquartered, and we have about, I would say, 5 to 7 of our national partners are also active in Michigan as well. So that was really the driving force. I know one of the other questions was around how did we kind of get all of our partners engaged and around this. To be honest with you, I think getting that first round of funding and seeing how strong we were together in the advocacy work that we did to raise awareness about what CDFIs are, what is the work that we're doing, how are we impacting the communities we serve. And we were able to get quite a bit of traction, bipartisan. We had some really great leaders. We were also very fortunate that the Speaker of the House at the time was from Detroit. He had worked with our communities, a lot of our partners for several years, so he was incredibly familiar with the work, and surprised there wasn't a lot of programming at the state level to support our community. So I think that really helped us get some momentum. And ever since then, the coalition commits to going up to Lansing, our capital, twice a year, doing advocacy days. We've created tool sets for our members so they can also talk to their local legislators. And then we also do advocacy together in DC. So we've really, is one of the core pillars of our coalition, but the other piece is sharing best practices, learning from each other, also bringing in consultants to help us learn about key things that are important to us, like CRA, recertification. So we have a variety of CDFIs in Michigan, whether it's credit unions, we have a bank CDFI, we have a lot of micro lenders. So it's a big variety. And so we try to be a resource to all of them and really try to provide resources the best that we can. The other thing I'll highlight is this year, one of our other policy priorities is working on a state revolving loan fund. When we think about capitalization, trying to see if we can get the state to create a $75 million fund where the CDFI loan funds could borrow at 2% for 10 years. And so we're starting that advocacy work. It's I think going to be a lot of work to make that happen, but that's kind of our focus this year in addition to the grant dollars, because we know grant money is hard to come by. So that's kind of where we're transitioning next.
Thank you, Jen.
Yeah.
So, Lakota, I want to turn to you now. The Mountain Plains Native CDFI Coalition is slightly different. It's not focused at the state level, but it's actually a regional coalition that's focused on federal policy. So can you tell us who's a part of this coalition, how it came into existence, and what were you seeing on the ground to kind of drive these organizations to want to come together and work on these issues together?
Yeah, thank you very much. So it's interesting to hear the origination stories of some of the other coalitions, which are very similar. I think we're all inspired and spurred by a need to gather more often. And it's fun to think about because this group of folks that gathered, we did this pre-COVID of needing, we represent rural areas. So we're representing the states of Montana, South Dakota, North Dakota, Wyoming. And oftentimes in rural spaces, we don't have the numbers to talk at scale or to answer the questions or to be interesting enough to some of the funders. And we have a big issue with philanthropy sort of overlooking our region in general. And so we share some of those pain points together. And we felt like we weren't convening enough, like we would run into each other enough at like conferences annually, but we really wanted to be able to have a peer group of executive leaders who are on the ground making decisions, but also so that the narrative for our region can be lifted up in a storyline together. So if I'm attending a conference that I'm speaking about the region in general and not just my specific target market, but we're lifting up the entire region. And there's a lot of similarities in our region, very rural, a lot of tribal nations. Many of our tribes have held on to the land that we originally had. And so some of that comes with collateralizations and uniqueness in the lending process. And so oftentimes we don't get that opportunity to get into the specifics unless you're sitting across coffee at OFN. So we really wanted an opportunity to engage more. And so one of the leaders in the area sent an email to a few of us and was like, hey, I think we should, meet more often. And so we began meeting, and it was pre-COVID. So this was about 2019, the fall of 2019, when we all got the email. And then of course, COVID kind of hit and impacted our markets, which was really essential that we already had the calendaring of meetings in place for us to come together. And it really became this opportunity for us to discuss what was going on in our communities, as well as with funding cycles and the contracting of funds during that time. We were all in a panic, but it was great to have this group of folks meeting together frequently to discuss the issues that were at hand. And some of them were like, do you have a telecommuting policy? Like send me your telecommuting policy. And it was just as simple as that of like forwarding information that we had. And from there, we just continued to find the need to meet, and we produced a vision statement and a strategy statement and came up with a framework to guide us. We currently are not formalized in any way yet. I think we're still at the thinking through that. We know, like all of us on the call know, like you're very busy running your own CDFI. And so we've pointed it out as a tension point at the coalition level, knowing the largest tension point we have is getting not distracted, but your time needs to be spent accordingly. You need your own organization to survive first before you have enough energy to give to the coalition, right? And it's this tension point we like to name, and it constantly pulls at us, and we just are always aware of that. And so I don't think that ever goes away. And I think that we as leaders just haven't decided we want another nonprofit to support and lead with. And so basically what we've done is it's kind of like a basketball team, like whoever has the ability and the bandwidth to apply for a certain set of dollars that are coming out, we bring it up to the coalition and say, hey, this opportunity exists. Let's go after those funds, and it'll support the operations of the coalition at the time. And we sort of pass through funding through a lead entity. So for example, Four Bands Community Fund, the organization I work for, was the lead entity for EDA's Build Back Better grant, which was great. It was a $45 million award, and it's really been leading a lot of our efforts lately. Of course, it's a great amount of money, and what we're doing with that is to build out something we're calling the Indigenous finance industry. So similar to what Leah presented with different topics, like it really is about us coming together as a peer group, discussing the uniqueness of our markets and sharing anything we can. And then also it's lifting up the story to making sure that the narrative is told about our region. We're screaming from rooftops together and our voices are louder, and philanthropy can hear us, policy can hear us, but it's less about moving the needle within a specific state. And it's more about on a federal policy level to ensure that some of the federal funds and the way that they give money to Indigenous communities looks and feels like the way that we want it to. So we're creating and redefining what that ecosystem looks like. And it's not just federal policymakers or anything, it's also philanthropy. So we've got this ecosystem of about 60 to 80 different funders that attend quarterly calls with us as we describe things that we're experiencing in our markets. And it's been really fun to watch it grow. I think after that, one thing that's unique about it too is what we're creating is something called a regional revolving loan fund. So that's what EDA funded. It's a $25 million asset. It's going to help us possibly explore a new capitalization strategy where possibly it could be purchased as a second, or create a secondary market to purchase those small business funds in a large enough scale that it's interesting enough to somebody. And then it can recapitalize those CDFIs, within this region. It's just an idea. It's nothing that we're ready to sort of launch yet, but it's fun to think about, and it's fun to have our peers in the space kind of look across the way and be like, oh, you're going to start a barbershop? Cool. That's what a barbershop looks like in South Dakota. What does the barbershop look like, on Crow Reservation in Montana? And it's been the most interesting thing I've done in my 12-year career of being able to look across the table at a loan committee and look across at your peers and watch as they underwrite and learn from them some of their best practices. So we're still new. We're not quite formalized as everybody else, but those are our goals.
Thanks so much, Lakota. And, these conversations and hearing from the three of you really highlight how important and how impactful this coalition advocacy is. And I think a couple of, themes for all three of your remarks is, building infrastructure to kind of connect and share information with other CDFIs in your region, working together to secure resources, telling our own stories about our own communities seems to also be a really common theme. And then, just continuing to leverage the bipartisan support that CDFIs enjoy and hopefully will continue to enjoy. So we've talked a lot around what, can be really good and what works really well about coalitions. And we know that they can be real drivers of change, but that work is not always easy. And neither is getting to a consensus on, what you're advocating about and how to move forward. And I think, Lakota, you touched on this a little bit with some of the tensions around how we run our own organizations versus how much time we dedicate to the coalition. The CDFI industry itself is really diverse, and not all the needs are the same depending on the sector and the CDFIs that you're in. So when you're thinking about kind of the policy agenda for these coalitions, like how do you maintain consensus and how do you focus on getting to that common solution? So Lakota, why don't we start with you?
Yeah, we have created sort of like a decision tree, we call it. And when there are certain decisions that we've agreed upon within our sort of memorandum of understanding with amongst all of us that I'd be willing to share with anybody, of decisions that need to be consensus. Some of them need to be anonymous and some of them need to be majority or whatever the different words are. But it was a process where we all sat down together and decided which of those sort of are low-hanging fruit that can be decided by project leads, we call them. And we've named the people that have raised their hand to lead specific strategies. And then that project lead, we for sure want to have, if any major decision is made up, 2 coalition members touch that decision point, right? So it's a very drawn out process that we could share about how we did it, but it was important for us to ensure that we specified that process so we could talk about governance, one, for funding purposes. Like funders are always going to ask that question, like, well, how are you governed? And how am I going to give money to this and ensure that it's going everywhere? So we were sort of not forced to describe it, but it felt very important for us to put a process in place, which we can describe in more detail later. But then it's really important for us to ensure that when you're talking about that tension point with running your own CDFI and then trying to be involved in the coalition, I think we're just making sure there's a balance in all of that and that there's a reciprocity of leadership. So we want the leadership to be shared and mutual so that it fuels that balance between everything. And we also put a lot of effort into individual capacity building. So if there's a biggest and highest need for forbands to focus on that's distracting me from participating in the larger goal, we as a coalition kind of gather around each other and say, let's get Lakota the support so she can develop that HR policy so she can, get that done. And then she can get back and focus on the larger group effort. And so we add a lot of funding in there so that each member can get individual capacity building support, which I think helps us maintain our participation in the larger collective goal as well.
That's great. And Lee and Jen would love to get your thoughts too on how your coalitions kind of come to consensus on your activities and your policy agenda.
Sure. Happy to start and let Leah jump in. For us, I think because we started with a pretty universal policy goal, which helped all sectors, all CDFI types, it helped a lot with getting, I think, some momentum as a coalition. I will say our grants are formula driven. So we had to work together with our credit union and kind of bank partners and then the loan funds and come together on how do we come up with formulas that allow us to all grow capacity, but be able to deploy the dollars quickly. And so luckily it was fairly easy. I would say in the policy world, I always use the 80% rule. Like we're not all going to get 100% if we want, but if we walk away 80% happy, it's a pretty big win for our community. So that's been one of the biggest things I think we've accomplished. I will say Michigan, like many, we have a lot of diverse sectors. And so we do try to support each other, whether it's affordable housing, small business, consumer products. We try to, as a coalition, support across the sectors, even if not all 100% of us are in that area, because we all benefit as a community when we're supporting good public policy. So broadly, it's gone pretty well. We haven't had a lot of difficult conversations to date. I'm sure there will come a point when we do. But I think we've been able to rally around each other and be fairly collaborative to date as well.
Yeah, I guess thinking about this question, I think the nonprofit structure, because we all are still all volunteer led and the coalition itself is not doling out resources. The nonprofit structure with the committees and kind of approving things at a board level, and then we kind of know like Impact is doing this with the pro bono thing. Leah's working with our lobbying partners around essentially the state fund, but something like predatory lending, like it would kind of come through that kind of more, and I would say loosely formal process. And then we, have the autonomy to kind of run with that. I think I lost the thought. The one thing I wanted to add that wasn't mentioned, at least for like Virginia, was we started with the small business with the initial funding, which the housing and the other types of CDFIs were around the table when that happened. And we were all collectively disappointed that it wasn't community development grants. And because we had actually put that language in there, but the staff at the state agency interpreted it differently than our intention. And so, being very transparent and open to the fact that it didn't go well for all the CDFIs and just making sure on the next round that we're doing our best to add things back in that include the rest of our types of organizations, which we were able to make it more generic. So the fund in statute has everybody kind of eligible based on the types of projects and stuff. So just continuing to kind of be open to learning and getting it wrong. But just kind of having that, again, that trust with each other that, we're just making this up as we go most of the time with a little bit of professional expertise around the table. But a lot of this is new. And so we're not going to get it right. But what we will do is fix it the next time around.
That's such a great point, and it kind of lends itself perfectly to the next question, which is around, education, which is such an important part of building support for policy change, especially on a really complicated topic like capitalization for CDFIs, where I think a lot of legislators and staff maybe aren't as familiar with CDFIs. I think especially non-depository CDFIs and loan funds, how they operate and the type and amount of capital that we need. So how do you get over that education hump? Like, how do you build awareness among lawmakers about the role of CDFIs and building a more equitable economy? Like, how do your coalitions kind of approach that education? And why don't we go the opposite direction now? And Leah, we'll start with you.
Yeah, actually, I think one thing that the coalition can do for its members is brag on its members. Because I know from being embedded in a CDFI from a marketing standpoint, we're very hesitant to brag on our success as an organization, but we tell our client stories all day long, as we should. And so I think the coalition's ability to brag on its sector is the first thing to kind of realize that it's okay at the coalition level. We should be saying all the amazing things that CDFIs do, and maybe starting there and then bringing the client stories in to add that personal connection or that connection to the district ideally. So I think it starts there from the coalition standpoint. The other stuff, I mean, we're working on it. It is hard. We have tried, we continue to iterate on our talking points and how simply can we describe what a CDFI is when you have 30 seconds, when you have, 1 page of information to not only describe the entity, but also the money that you want. so it's a moving target, and it has gotten a little easier as CDFIs have been, like I said earlier, more common in some of the policies and program design in some of our state agencies. But I think we all have a long way to go across the country.
Yeah, I would agree with everything Leah said. And I think the one thing that we were fortunate in Michigan, we had a couple of great foundations who gave us some seed capital to get the coalition going. And with some of those resources, we were able to hire a vendor to help us kind of do some of that storytelling and creating a website and some documentation. And so they helped us really, for someone who wasn't familiar with the industry, kind of help us in a 2-pager. How do we say who we are and what we do and what our impact is? We've also spent some money collecting data from our members so that we can also tell our impact in Michigan specifically in the type of areas that we work. And then we've also just put a couple 1-pagers together highlighting clients in our different sectors. And that's been helpful. As we know, legislators don't have a huge capacity to read through tons of things, but having a couple 1-pagers or 2-pagers has been really helpful in visualizing, I think, the work as well, with photos and simple graphics as well, which has been, we've noticed that's been a really kind of a shift for us when we're meeting with legislators.
Yeah, I think just some other things that we have done that the other that Jen and Leah had mentioned were just recognizing the importance of this. And so we really view the work that we're doing for systems change to be like a social movement. And we really wanted it to create like an exclusive party that everybody wants to be invited to. And so we wanted to hold on to data. So we did the data thing and wanted to talk about the region. And then we did some really strategic invites to philanthropy. And then we actually asked our strongest partners and networks within the ecosystem to then invite somebody else that they knew, right? So that it was more of everybody needs to come and hear to this quarterly call and learn about what's happening within these markets. And so we host quarterly calls, like I mentioned, with very strategic roles. So some our panelists are actually exist. Sometimes we have a section in there for the ecosystem partners to talk to each other, for funders to hear from each other about why they've invested in a specific CDFI in the region, and they can hear it from their voices. And then we've actually individually met with each of the marketing teams from a lot of the partners or legislators at their entities, and we ask them to tell our story for us. And sometimes it's really interesting when you hear people tell your story back to you, and you can notice where there's misunderstandings and there's different nuances of how they view your work, and you get a moment to correct it in a safe space, right? So we've done a good strategy of doing events and inviting funders to these exclusive events that we're holding within the region. So they come to our place, and it's a shared sort of reciprocal opportunity to ask questions and learn, and including legislators and other things like that. So I think it's kind of twofold, making sure that you're creating a safe space for questions to be answered. And it's a lot of work where you've got to constantly do one-on-ones with people and invite them or give them a space to ask questions, and then make sure that their marketing teams and funders are learning ways to talk about your work and feel comfortable about making mistakes and then fixing it and then redoing it. Because I think oftentimes it's one of those really special relationships that we don't get an opportunity to do. So that was really important for us in shifting some of the narrative.
I love that idea of having other people kind of tell the story to you, and then you can sort of reflect back on it and offer advice. What a great idea. The other thing I heard from your remarks, Dakota, is bringing in philanthropy. And I think that's a really important point too, because we know that, these policy changes don't necessarily happen independently. It often requires bringing in other voices and other partners. So Leah, I know that the banks in Virginia have actually been particularly important in getting some of your initiatives across the finish line. Can you talk about how you've worked with those institutions to drive that policy change?
Yeah. And I think, Lakota, your remarks reminded me of, like, I was kind of thinking, well, we got other people, and to be crass about it, I honestly, at the end of the day, I didn't care if the delegate knew what a CDFI was, if they were willing to give our bill, because the bankers asked them to do it. So, sometimes you get into the small p, big P politics of this, and you can find alignment around things like the work CDFIs do, lending, with maybe some associations that you wouldn't necessarily. So the Virginia Bankers Association has been a partner since day one, and has helped us every year kind of figure out what patron, and has used their weight and their trust here in the state to help us get into doors that we wouldn't, they don't know what CDFIs are or who Leah is, so I wouldn't necessarily get those meetings. Also, Virginia First Cities, which is an entity that represents literally the 16 first cities that were established in the Commonwealth, because they have an economic development, and the goals of the cities are to have, vibrant communities. We align very well with them. And so again, using them to tell our stories, and they do get it a little off sometimes as far as their talking points, but again, we're continuing to work on that. The one thing I will say, in addition to the policymakers, is I think that philanthropy has been another stakeholder that has been influenced, not only because of the money and stuff, but we've pushed on them to do grants differently, and how they expect community transformation in 1 or 2 years because of their grant performance, or because of how they have historically kind of viewed their grant making processes. So yes, we're talking about policy and advocacy mostly here in the public sector, but don't underestimate where you can push in on philanthropies, corporate and private and community, and they can do their money differently because of how we share our stories and the impact. Yes, we're doing the loan fund in this targeted neighborhood, but you're done after 3 years. And this is, this community has been extracted from for decades. It's not going to work. And I think now in this environment, they're more open to hearing that and have more flexibility to innovate on their grant programs. And so, lean in there too, because that can help us be impactful in other ways.
Great advice. And, as we come to kind of the close, unfortunately, of our kind of discussion here, I want to pose one final question. I think a lot of CDFIs that are listening in are probably thinking, yeah, this isn't for me. I can't engage in policy because I'm too small, or I don't have dedicated staff, or, I'm really focused on providing the loans and technical assistance to our borrowers. So what advice do you have for CDFIs that are thinking about how to engage in policy work, but are worried that they don't have the ability to kind of dedicate resources to building out a full policy team? Like, why is this important, and where would they even start? And why don't we start with you, Jen?
Sure. And in full disclosure, I am a former policy staffer. So when I put this hat on, it has I get a couple different reasons, but advocacy is a lot of work. But I will say that the one thing I think I've learned and loved about the policy work for the CDFI goals that we've set is that we have great stories. And when you can get in front of legislators, whether it's state, federal, they love what we're doing. They love the void that we're filling with our amazing products. And I think I've never had a bad meeting with a legislator talking about CDFI work. And if you're willing to dedicate some of the time to raise awareness about the work that your individual organization is doing, that our community is doing, you're going to naturally start to see some momentum happening around policy, budget things. And the more you grow that within your state and community, it happens fairly organically. And it takes some time and effort to do it. But I don't know how Leah and Lakota feel, but I feel like it's been amazing that the reception that legislators have when you spend some time with them and you're telling your story, both as a CDFI yourself and the coalitions. And I think if you can find someone who can help guide you in knowing who to talk to, and helping you get your foot in the door, it's amazing how you can get comfortable having those conversations after a couple meetings. So I just encourage you to try, take a leap.
Leah, Lakota, any thoughts on this?
Yeah, I just agree. I think that, the work that we do, like I mentioned, to us still is really a movement more so than it is in an industry. It really is that we want systems change to happen, and that can't happen in a vacuum. So it does require creating regional partners or networks, and so that together we still believe that, you can co-create new systems so that the overlooked populations of America can get access to capital, right? So it's the basic premise, and it feels to be like a part of the work. And we've made it a core tenet of advocacy being a part of the work so that we can see that systems change level. And, I'm with Jen on just taking a leap, but I don't think that it's in alignment with everything else that we're doing. We're just making sure our stories are heard at a national level, or a state level or local level. So
Yeah, I'll just double down on what Lakota and Jen said. Just start. None of us have the resources to do the work when you don't have the resources to do the work. But someone started, someone collaborated with somebody else, someone shared a client story with a banker or a lobbyist. And so it doesn't have to be, the full suite of work and services. It can just be responding when you get the call to action. Hey, call your delegate. We have this bill. Call them right now. Send them an email. Doing that takes 10 minutes. A lot of times it's already written for you. So being responsive when those calls to actions are coming out. And, again, the data, the client stories that we're already collecting, that's the meat right there that we need to advocate and share our stories. And so being, again, helpful when those are being collected and organized from a coalition standpoint, or even if it's not a thing yet, but you have 2 or 3 people kind of running point on this organically, just leaning in when you can and helping them get going if it's not something that your organization or you have capacity to do.
Absolutely. And what a great kind of last note to leave this part of the conversation on. We are going to now move over to the breakout room where we will hopefully be able to answer any questions that you have and hopefully get to some of the things that we didn't get to in our time on screen today. So if you're not joining us in the breakout room, thank you so much for being with us today. And huge thank you to our panelists, and for everyone else, we'll see you in the breakout session in a few minutes.